Welcome to the OmniTalk Fast Five, sponsored by Takeoff and the A&M Consumer and Retail Group. The OmniTalk Fast Five is the funniest, fastest, and most fervently insightful breakdown of all the week's top news in the world of retail, and also the podcast with the best alliteration. It's July 8th, 2021. I am your host, Ann Mazenga, joined today by returning guest host, author of the book and host of the podcast Remarkable Retail, Steve Dennis. Steve, welcome to the
Hey
show.
there.
It's good to
Thanks. I'm
have
happy.
you.
Yeah, I'm happy to be back. It's good to see you.
We are coming back from a holiday week off. Steve, how was your 4th of
Mhm.
July?
It was good. I was off in Telluride, Colorado, which is a wonderful
Ooh,
place in general, but particularly to escape Dallas and its heat. It was very beautiful there, and I tried mostly not to work, and now that's catching up with me. So
the
here we
worst
are.
part. It's the worst part, right? You take a couple of
Yeah.
days off and then get smacked right back when you get in there. What is the 4th of July celebration entail in the Dennis household? What do you guys do in Telluride to celebrate?
It was rather quiet. The fireworks and parade were canceled, so
Oh,
mainly due to um, concerns about partially COVID, I think, but also it's so dry out there, so I
oh,
think they were concerned about it. So just hanging out, enjoying some music, eating too much food.
yep.
It's kind of it. Nothing terribly exciting.
Is there any special like dish that you guys make for 4th of July? Like I know in our family we have
You know?
Jello cake. Like that's a 4th of July thing that we make, like a cake with Cool Whip and like the
Yeah.
flag out of strawberries and blueberries. It's a very Midwestern thing. You guys, do you
No,
guys
because
have any?
because I'm old and my kids have moved elsewhere. I think all those traditions have died. It used to be more barbecue or whatever, but no, nothing. I
No,
don't
you
know.
guys
I'm
just do
I'm
your
pretty
own
dull.
thing.
I'm
You
pretty
just do your
dull.
own
Yeah,
thing. All right. All right.
takeout.
Well, that's good to hear. I'm glad hope everybody listening had a wonderful 4th of July. We are going to get into the Fast Five today. Today, we are going to talk Bloomingdale's launching their off mall concept, Bloomies, Glossier raising another $80 million as they set out to build more stores. John Lewis moving from retail to real estate ventures, and Brookfield and Simon Properties' latest ghost kitchen investment. But first, we are going to take off with our first headline. And that is headline number one. Steve, do you know who does not have a holiday hangover? Dollar General or
Yeah.
Chain Storage's Marianne Wilson. Both of them came back from the 4th of July holiday with these crazy big stories. Two huge announcements. First, Dollar General announced that they're expanding fresh produce to more of their stores. They currently offer fresh produce in more than 1,300 stores, but they have plans to now expand that offering to 10,000 locations, including a meaningful number of stores that are located within the USDA's defined food
Mhm.
deserts. That was big news. That was Tuesday. That was right out of the gate. And second, yesterday, they announced that they've hired their first chief medical officer and they plan to build a comprehensive network of affordable services for Dollar General customers. So they'll be, in addition to expanding potential medical offerings in Dollar General stores, they're also going to be expanding their assortment of cold and cough, dental, nutritional,
Mm.
medical health aids and feminine hygiene products. So two giant stories out of Dollar General this week by way of Chain Storage. And also, this is the headline that A&M Consumer and Retail Group has chosen for their put us on the spot question. So, Steve, you and I need to answer as we're carefully considering our thoughts around this big announcement. Do you believe that by pushing into healthcare and fresh produce, Dollar General can provide value to this underserved market? And does expansion into these categories threaten Walmart, Amazon, and some of the other big players in the space?
Mm.
If so, how can Dollar General differentiate themselves? And are there any other categories you think they could do so by expanding into? Big, long question, but
I
let's
was
get
going
your
to
thoughts,
say
Steve.
we have like 3 or 4 hours to answer this.
Yes.
Well, first of all, I think a few things are going on here. One is all the dollar stores, I think, have to think about how much growth is left down the road by opening stores. I mean, they've opened so many stores. I've seen some analysis about just kind of the overcrowding of the space. So I think some of this is okay. We may not be able to drive future growth, by store openings as much as trying to
Mm,
drive store productivity, average transaction value. So I think part of this is thinking about those categories that can drive growth.
right.
Also, these dollar stores rightly get a lot of criticism for serving unhealthy food and promoting, not promoting, but contributing to less than healthy lifestyles. So thinking about fresh produce, thinking about healthcare makes a ton of sense. The healthcare part seems a little bit of a stretch to me. One of the big
Hmm.
advantages for dollar stores is they have so many locations in many markets that are not well served by a lot of retailers. But I generally don't think the markets they're in don't have a pharmacy, a Walgreens or something like that. So it's not as obvious to me that this is this big open area. That the wellness part sounds a little bit more like a PR move. The fresh
Okay.
produce part, I think is a bit more of an opportunity, both from a PR perspective and being a good corporate citizen, but in terms of addressing these food desert areas. I mean, the data is pretty clear that there aren't a lot of good choices. So I'm more favorable towards that one. My big
Okay.
question for these dollar stores, really for any retailer that's trying to expand their assortment meaningfully, is what goes. These are
Right.
not big stores. What are you not going to sell? Or are you counting on maybe a bigger store format going forward? So I think it's the curation and the merchandising of it that makes me wonder how this is going to be a big opportunity. But I certainly think from a PR and from a consumer standpoint, the fresh produce piece makes a lot more sense.
Yeah, I mean, I think when I first heard this, I mean, I was really concerned for the Walmarts out there and the Walgreens and CVS's. I mean, the Dollar General has, 16, 17,000 stores,
Right.
and like you're right, to be able to have that footprint, they're already ahead of a lot of those retailers. And if they can start doing, I pulled some data. This was actually the data was from 2012, so the data is old, but I think even if you add for inflation, the average family of 4 in 2012 was spending $4,000 a year at a Walmart, and
Mhm.
90% of Americans live within 10 miles of a Walmart. 75% of the population live within 5 miles of one of these $17,000 General stores. So I think that if Dollar General can start to pick up some of these trips, like you're saying, Steve, it will require having the right assortment, the right fill-in products. But if they can pick up some of these trips that otherwise would have gone to a Walmart,
Mhm.
if it's more convenient, if they can give customers a reason to come to that store over a Walmart, and fulfill all the needs that they might have for that shopping trip, there is a lot of money to be made here by Dollar
Sure.
General. I think for me, one of the things that I think about is, what kind of technology are they planning on putting into these stores to, accommodate staffing a medical center, or like
Yeah. Right.
how are you finding,
That's a
we
whole
we know
different
that,
thing. Yeah.
right, we know that that's a big area of concern, right now, just with the current labor shortage that we have. But then also, how are you figuring out how to, rotate staff? Getting into the medical industry is an entirely new industry beyond
Right.
retail. So I think you're right. Like the produce makes sense. That operationally seems like it wouldn't be a huge lift for these stores. But yes, the other areas of incorporating, healthcare into the mix, while very valuable, if they can make this happen, is something that will require a pretty significant alteration to the business model. But great for Dollar General and customers if they can make it happen.
Yeah. Absolutely.
As for other categories, Steve, anything else that you could think of that Dollar General could get into that might help them in this, be more, I guess, defensible against some of the Walmarts or Amazons as they continue to expand?
I don't think there are any obvious big ones. I mean, the dollar stores have become kind of this weird kind of convenience store, right? Like there were blown up 7-Eleven, there was shrunk down Walmart. So they sit in this
Right.
really interesting space. And I think clearly because they just kind of outlet, that's a term. So many other retailers, it's a huge advantage. But no, I don't know if there are any big ones. I think grocery and maybe some prepared food, something like that.
Sure.
Um, could be an issue. But again, you get into this issue of the operational complexity of doing it, and they're not big stores. So if you're going to make a push into one area, something has to go, I think. And these
Right.
aren't e-commerce businesses. And it's not like this is an endless aisle sort of play, I don't think.
Yeah, and I think the thing that you mentioned that's important is the space. I mean, for me, I was thinking like, can you get into being like a drop ship site? Like, do they start to become a place where
Right.
like, Wayfair or Boxed or some of these bulk items, like could this be a pickup
Hmm.
location for those kinds of things? And are there ways that you could use lockers or something else that wouldn't require a change, like a significant
Sure.
change to the internal store footprint? But yeah, I don't know. I think it's a fun thing to kind of think and ponder where the future of Dollar General goes. And even, I mean, we didn't talk about their Dollar DGX stores too, that they're
Mm.
doing the grab and go concepts and
Yeah.
how they might learn from those concepts in more urban areas and maybe figure out what they could apply to some of these more rural areas.
Sure.
Well, Steve, I am excited to get your perspective on headline number two, given your background. Bloomingdale's has announced that they are moving off mall with the opening of their new concept, Bloomies, that they're opening in Fairfax, Virginia on August 26th. According to CNBC, the roughly 22,000 square foot space will sell men's and women's apparel, footwear, jewelry, handbags, and beauty products. And the merchandise on the floor is going to rotate frequently throughout the week. So if you see in the images, it's very flexible, fun fixtures, and it'll give customers something fresh to look at every time they return. The company, which is owned by Macy's, said that Bloomies will serve more as a hub for experiences, including, Steve, a colada shop, which I've never heard of before, but I'm intrigued by, and a restaurant with coffee and cocktails. What are your thoughts on this one, Steve? You've been with Neiman Marcus, you know the luxury
Yeah.
market well. What do you think of this?
Well, part of me is like, I feel like 2005 called and it wants its press announcement back. I have worked in the late 90s and during the 2000s on small store concepts. When I was at Neiman Marcus, we basically launched this store in 2007, I guess, a concept called
Imitation
Cusp.
is the best form of
Well,
flattery, Steve? I don't know.
and Cusp, I mean, there's a lot of different things, obviously, that have happened in the intervening time, but part of me, I've been very critical of Macy's in general for basically watching the last 20 years happen to them.
Right.
They have, despite having consolidated the space and done all sorts of things, they've continued to lose market share across all their formats. But I don't think Bloomingdale's is any different. So part of me is like, oh, really? This probably was a great idea 15 or 20 years ago. Um, but I applaud them for trying things. I think, the thing that's different, and I wrote something for Forbes about the other day, and I cover this in my book a little bit, is I think there's this idea that Nordstrom has really been pioneering of how do you maximize your market share in a given geography through e-commerce and a mix of formats. And so, given that the large scale department store format has been losing market share for 20 years, pretty much, what's a different way to get closer to the customer and serve certain segments and certain purchase occasions pretty well? So at the
Right.
heart of that, I think this Bloomie's idea is not a bad idea. That it's getting closer to the customers, it's thinking about maximizing market share. It's also what Macy's is trying to do, though poorly, with their Market by Macy's concept. So interesting idea. Um, these smaller stores, though, from my experience, they're really hard to get right because you're significantly editing from a 200,000, 150,000 square foot
Yeah.
Bloomingdale's store down to
Right.
22,000. And the question is, who's it for? What's it for? And what makes it remarkable? And by
Hmm.
remarkable in the way I talk about in my book, but this is not a growth category. So for it to work, you're going to steal market share from other places, I would argue. And at 22,000 square feet, you're talking about a store that probably has to do, 10 to $15 million in volume to work.
Hmm.
And so who is it edited against? If it's just kind of a greatest hits of Bloomingdale's, it's just really tough to make these sort of formats work. They're 3 miles away, I think, if I remember correctly, from Tyson's Corner, where there's a Saks, there's a Neiman's, there's a Nordstrom's, there's plenty of other specialty stores. I don't know, having pina coladas, if that's a strong enough reason to
Is that
drive a
enough
lot of
of a draw for
traffic.
you, Steve? Would
I
you
don't
go for
feel,
the colada shop?
I don't, or like, I feel like we should be like getting caught in the rain or something. I don't know.
That's
Like
right. That's
the
right.
advertising
Yes,
almost writes itself. But
it's right.
so I don't know. I love the strategy of these hybrid go-to-market strategies of different formats to maximize market share. I don't have a good idea of really what this store is about and what is going to cause it to, cause enough customers to shift from where they're currently buying their apparel or getting their pina coladas for that matter.
Well, Steve, I think that you hit on a great point. You brought up Nordstrom. I think that for me, this concept needs to really pay off convenience. I think
Hmm.
Bloomingdale's or really anybody coming out of this post-pandemic world, any retailers need to think about what convenience means for your customer and how your strategy aligns with making the most convenient shopping experience for them. And I think that where Nordstrom Local does so well is the services. It's not really
Right.
about, they don't even have clothing to choose from in those stores. But if you go into one of the Nordstrom Local locations, I mean, we went into the New York location days after they open, and the entire outer walls of the store are filled with packages that are ready for people to pick up. Like,
Hmm.
people want to use this service. They want to be able to try something on in the store, return it, bring in their own clothes that they might want to wear with that item that they're trying on, and have that kind of experience be quick, easy in and out, and then go to the major flagship stores when they want that full-on department store
Right.
experience. But I think that for this concept to work, it's less about the restaurants and those kinds of things. And believe me, back in my Target days, I was all about, these food experiences and really what was getting people into store. But I think at this point in time, it is number one going to be about how quickly somebody can get in and out of your store and accomplish as many things as possible while they're in that space.
Yeah. Yeah. And I think, that's sometimes I say, what's the definition of convenience, right? But if you're trying to put an outfit together,
Right.
it may be very convenient to drive to the mall where you can see a whole range of stores or go to the full line store. I mean, that has been a challenge, I think, of a lot of these smaller store concepts, is to become sort of a baby Bloomingdale's, right? And it's like, well, that's not really what I go to Bloomingdale's for when I'm thinking about putting an outfit together,
Totally.
right? So it's a very tough balance to strike. We'll see what it ultimately looks like. I mean, we've gotten some clues to it, but I am very colored, not to get off into another tangent, but I am very colored by my experience with the Market by Macy's concept, which the one that's not too far from me here in Dallas was just a total miss in terms of not knowing who the customer was for, not serving the convenience, not having the convenience of a great assortment, but not leaning into the kinds of things that Nordstrom Local is really, really good at. So perhaps that bias is carrying over in terms of the way I think about what Bloomies might look like and how it might do.
Well, I think that's a great recap and analysis, Steve, and appreciate your expert insights from your years of experience with some of similar retailers, Macy's and Neiman's being two of those. I'm going to take us into our next headline. Speaking of the mall department stores, something new is coming to Brookfield and Simon malls. C3, also known as Creating Culinary Communities, which is perfectly in line with Amitabh's alliterative podcast, which is a project of former hotelier Sam Nazarian, is planning for 1,000 ghost kitchens to be opened by the end of this year. Now, why is this a retail story? Because two of the major investors in C3 are shopping mall giants Brookfield Asset Management and Simon Property Group. Another investor in this $80 million raise to support the C3 effort is Reef Technology, which is a SoftBank Group backed operator of food delivery kitchens and hubs for goods and services. Reef Technology is a really interesting company making use of these small parking lot spaces in urban centers. C3 plans to lease space in Brookfield and Simon malls across the U.S. for a hybrid of their ghost kitchens and dine-in food hall concepts in order to maximize profits. So, Steve, this is going to totally shift what the food court of the mall was that we know it. And as people are trying to figure out new uses for the malls, what are your thoughts on this new strategy or approach that C3 is taking for some of these Brookfield and Simon properties?
Well, I'm a little bit worried about where I'm going to go to get my free sample of teriyaki chicken if this gets too shaken up. But I mean, food courts for the most part, absolutely need to be reinvented.
Right.
And ghost kitchens are very on trend in terms of the move to home delivery. And there's lots of opportunities, I think, to kind of reconfigure how the home delivery space works. So on the one hand, kind of like it. On the other hand, the problem in home delivery certainly has a lot to do with consolidating the food prep, but it also has to do with the cost of delivering to people. So this gets at a little bit of the issue with the long-term sustainability of home delivery, which is good. But it doesn't all come together unless people can figure out how to make money actually delivering the stuff. Different episode probably.
Right.
Um,
Right.
I'm a little bit mixed on, like, I get the idea that the malls want to reimagine the space, or just make use of space that they can't productively lease. That makes sense to me. I'm having a hard time imagining how this works at scale in more than a handful of properties, because the ghost
Mm,
kitchen that's not too far from me, which is quite a big operations, different people involved with it, it's just as a sea of cars just constantly coming, right?
right.
And so I'm trying to imagine at a nicer mall, how you kind of consolidate, you get the kitchen space, which you have to spend a lot of money to support this. You reinvent the food hall, and then you've got to have this like constant flow of cars coming, which is, if it's a good mall, it interferes with the whole customer experience. If it's a bad mall, that's a whole different question. So anytime people talk about repurposing these malls to be Amazon distribution centers or grocery micro fulfillment or whatever, I'm always like, well, okay, but you have to spend a lot of money to get there. It affects the whole shopper experience by having just a sea of cars constantly coming. And, there's zoning things and stuff like that. So I don't know. The doing this at scale seems a little bit challenging. I'm sure there's, a few dozen locations that they could make work.
Do you think that that's surmountable? I mean, I think that this idea, I hear, I'm such an advocate for, the malls being used as fulfillment centers and as
Mm.
these ghost kitchen locations. And I hear and understand, that there are zoning requirements and there's traffic flow. But do you think that's something that we can overcome, that it's going to take some investment in what that property becomes, and an investment in the infrastructure to support these kinds of businesses? And do you think that that's just not something that the mall operators are interested in doing, Steve? Or
Well, I think the mall
how do you think
operator, I
about
mean,
that?
it gets a little bit, not to be too much of a depends question, right? But you've got 150 to 200 malls, which are really, really strong. And yes, they need some changes, but they don't need to be fundamentally repurposed. And then you have every other mall. And I think both from a
Hmm.
mall owner and a community standpoint, if it's a low traffic mall, it's not paying taxes, people will figure that out.
Right.
It's more, and I think, largely Brookfield and others, they're a little more concentrated in these better malls. And then I think, that becomes a little bit more of a complex question. I'm just trying to picture, when I think about some of the malls that are around here that are good malls, and I think Brookfield owns a couple of them. What does it actually take, to sort of picture where food courts are,
Right.
in the center generally. And so, can you work around it? Sure. But the other question I think will always be, if I'm an investor, is that, okay, you know, I can go to that location with that access and egress and blah, 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 and spend all this money to try to make it work. Or I can go a mile away into a warehouse center and not have to do as much and not have to worry about the traffic and fighting with, so there's always going to be that sort of cost trade-off. And I think in a lot of cases, just like the issue of doing a grocery micro fulfillment center, the cost basis has to be really, really low in
Right.
the property you're going into to redo it versus go into a space that's just easier to work with. And so that's where my head, that's probably a long-winded answer, but that's where my head goes to is, yeah, a few dozen
Sure.
of these probably work. A few hundred, I don't think so.
Right. No, I think that makes sense. I think the other thing that I'd point out is that it's not about, food halls were all the rage pre-pandemic. I mean, you saw
Mm,
tons of people going into this space, and I think now that people are starting to come back, that idea of food as a driver to a retail destination is still, people are still experimenting with that, clearly with this
sure.
story also. But I think that, again, it comes down to what's that shopping experience? How do you take this post-pandemic customer that is so accustomed to ordering online from DoorDash, from Postmates, from, Uber Eats, all these places, who's well versed with that technology? And then how do you put them back into a food hall or food court situation? And so I think that these operators, C3, are going to have to make as big an investment in the technology for, how do I order from multiple vendors in the food hall and have one
Right.
checkout? Or like these,
Yeah.
these, consolidated point of sale systems, like all these kinds of systems that need to be in place for that customer to have a seamless experience, or for the delivery drivers, to your point, who are going to be coming in mass to, deliver to all of these homes within range of these shopping malls, to be able to have that quick in and out experience. It's Nobody's going to be waiting in line staring at, Sbarro slices under a heat lamp anymore. I don't think that you're going to have the patience, and be able to do the volume, in that location, if you're going to go about it the old way of doing
Yeah, for
things.
sure.
So big investment there. Well, another company that we have in the news this week is looking at ways to repurpose their space, and that is John Lewis, the UK employee-owned company carrying John Lewis department stores and also Waitrose Supermarkets, has announced plans to build 10,000 rental homes on their properties over the next decade. The properties will range from studio flats to 4-bedroom houses. They will be built on sites owned by the chain, above Waitrose Supermarkets, or on land next to the company's distribution centers. Tenants of these spaces will have the option of renting homes that are fully furnished by the department store, and some of the developments will come with concierge service and a Waitrose convenience store in the development. Steve, I was pretty jazzed about this one.
Hmm.
I thought it was a really fun concept. What do you think about this?
I think it's pretty interesting. I mean, it's hard to, you know, real estate, right? Location, location, location. So without
Right.
seeing those, I don't know that I can go all in, but I think this idea, if you've got land already that's excess in some way, and there's demand for housing, and you can tie it together with your retail offering, it seems like there's a lot of there, and certainly fits with what we're seeing here in the States with a lot of more, mixed use
Mhm.
redevelopment. So I don't know. I like it. I think it's really intriguing, and it's a great way of repurposing land you already have, and hopefully supporting your retail formats.
We'll talk about lots of new business models. I feel like that's been a recurring theme throughout this. We have Dollar General getting into healthcare, John Lewis getting into real estate. But I agree. I mean, I think this is a really great idea to, again, look at my customer completely, a 360 view of my customer, and how can I mean, effectively build a space for my customers. I'm
Mhm.
building a home on top of my stores so
Right.
that you can have a convenience store, potentially an autonomous convenience store right in your main floor, but
Yeah.
that I can start to serve and really get to know the customers inside my building, and then be able to curate an assortment for them that's in the bottom of their building, that doesn't make it so that they have to leave and go anywhere else.
Mhm.
They're my
Right.
customer in so many ways. I think that it's smart to also be experimenting with, renting the furniture services and having
Mhm.
these as examples that they can point to for people that are looking at, um, you know, taking that on or exploring that option, from a customer perspective. But then, I do question your location is 100% on, Steve. The distribution center
Yeah.
homes,
Right. Oh,
that to me was like, I don't know, John Lewis. I spent some time in London as a college student, but I don't know if I'm gonna rent a flat next to a giant distribution center with trucks going in and out. But you never know. You never
yeah.
know. It all comes down to price and convenience and where they're located. So we'll see what that looks like. I think I'm signing up for the condo on top of the supermarket. I don't know about
Yeah.
you,
That
Steve,
sounds a
but
little bit more appealing. Yeah.
Me. All right. Well, let's go to our last headline. We have Glossier having a Diana Ross moment right now. They are coming out. They announced this week they've raised another $80 million in Series E funding, increasing their valuation to $1.8 billion. Lone Pine Capital led the round along with participation from existing investors Forerunner, Index, IVP, Sequoia Capital, and Thrive Capital. The fully direct-to-consumer business will use the funds to continue to scale their online and offline channels globally. If you'll remember, they're opening 3 stores this year in Seattle, Los Angeles, and London, and are planning for dozens more, Steve, in 2022 as they build the world's #1 destination for beauty discovery. What are your thoughts on this one?
Well, it turns out that physical retail isn't dead. I don't know if you heard this
I
before.
I remember. I think I've
Um,
seen you post that a couple times, Steve.
once or twice. Well,
Yeah,
so first of all, I think Glossier has absolutely carved out a really strong niche position, like a lot of these digitally native vertical brands have, where they've got a very particular customer, strong brand personality, products that are very much designed or curated against that. And so I think, as just about every digitally native vertical brand on the planet has discovered, you're going to need stores. You need stores because some customers aren't going to buy your product unless they can try it and have that experience. Cost of customer acquisition tends to be lower. Beauty is not such a big issue with returns, product returns, so much. But it's been very clear to me for years, which is why I've been saying it for years, that for these brands to get at any kind of scale, they're going to need a strong physical component. So I think this was completely predictable. I think obviously beauty was a challenging category during the height of the pandemic. So now they need money to go fund that growth. It's a pretty hot valuation market for e-commerce brands, where Warby Parker is going public, Allbirds is going public. So I mean, I think this is this moment in time where they have to step on the gas. They have to kind of do a bit of, I don't know how much of a moonshot it is because I don't know their profitability. My guess is it's poor. And so you're at this point where it's either like, we can't make it or we got to go for it. And the got to go for it means investing in brand, investing in stores, perfect timing to try to raise money, I think, in terms of valuation. So, we'll see how it plays out. But I think most of these brands, they don't have any real choice but to sort of go for it at this point, because staying in the middle basically probably means kind of slow death. But I like the brand. I don't know what the economics of that brand look like, so it's hard for me again to like come fully down on it without some more details. But I think it's very, very predictable that we're going to go in this direction, and great time to raise money.
Yeah, well, that goes. I think that's the absolute truth right now. Is it seems like there's a lot of money flowing out there for these kinds of initiatives. Steve, I'm curious. They said Seattle, LA, London. Where else would you be going right now if you were Glossier?
Well, I don't know, get the Warby Parker location list and go next door. I mean, there's a certain degree. I mean, I know somebody mapped this out a while ago. If you took Untuckit, Warby Parker, Apple, there were a few brands that like every brand that aspires to is within 300 yards of there. So,
Right.
so it's going to be, New York, Chicago. I mean, there's just Austin. I mean, I could probably come up with a list of their 60 next locations within a couple blocks, and it's going to depend on whether there's space available. But I mean, the playbook. But I think the real answer from their own numbers, which sometimes people think is counterintuitive, is pick the zip codes that you have the most customers in and open stores there. I mean, everybody. I mean, this is what Williams Sonoma did 40 years ago. Like, this is not a new strategy for direct to consumer, but it just turns out that if you open a store where you already have a lot of sales, your online business tends to go up. And so it's really about that trade area market share. But I think they'll go all the places that, everybody else before them has gone. Like, it's not that complicated. I think it's the world's easiest job as a real estate broker, probably at this point.
Right. That's true. I'm curious to see globally where they end up going. Like, are they going to start going into the Chinese market? Like, will they start to get into some of these bigger, I guess, more dense consumer bases, and how will they do in those markets? Will they start to go into, Will they be selling on with Alibaba? Will they go into these other spaces that will allow them to kind of get, I think, to your point, closer to profitability, to try to reach the volume and sales that they'll need to support some of these experience stores that they are rolling out?
Yeah, I mean, I think international has been, true. I mean, I think, going to Toronto, going to Vancouver, not such a stretch for a lot of these brands. But, when you start to get into, as I'm sure you know, different market characteristics, setting up e-commerce fulfillment, it gets a lot more complicated, I think more so than many people imagine to go into some of these international markets. I mean, I think the wholesale piece is interesting. We've seen a lot of these brands, whether we're talking about, I know you talked about Indochino recently, Allbirds, a lot that have, decided to partner with a Target or partner with a Nordstrom to start to build that brand awareness and then come behind it, perhaps with a stronger store offering. So yeah, I could see an Alibaba partnership. I could see a partnership with maybe a big European department store or Middle Eastern department store, or Australian, for that matter. But yeah, that's when it starts to get a little bit more complicated in terms of the risk and the cost trade-offs.
Well, Steve, that wraps us up for the headlines this week. It is time for our rapid fire questions. Are you ready?
I'm as ready as I get.
All right. Well, let's go. Steve, I know from your book, Remarkable Retail, that you're a big SNL fan. What is your favorite SNL
Is that what you took
skit?
away from the book?
Well, it was one of many things,
One of
but
many things,
that
okay.
was
Yeah.
that was one of my favorite lines that you have in your book, is that it's from Lauren Michaels, that when it's 11:30, it's time to go live. We're going live. It doesn't matter what's going on. The show must go on. So, so yeah, favorite SNL skit.
Well, there's part of me, and probably nobody listening even remembers these. There's part of me that wants to go Sprockets, which is kind of a deep cut.
Yes.
And as a speaker, I kind of maybe tilt to the Matt Foley, living down in a van by the river. But I'm going to go with Cowbell.
Cowbell. Oh, that was
Cowbell.
a good one.
Yeah,
that was a great one. I think my favorite is actually a newer one, Kate McKinnon, when she gets her skits where she gets abducted by an alien and recounts the tales. I was just rewatching that this morning, and it's a good one. All right, ITV is set to launch shoppable TV during its wildly popular series Love Island, allowing users with a smart TV to purchase featured products. What brand, without question, Steve, should be leveraging this platform right now?
Well, I'm going to admit to never having watched Love Island. Not that there's anything wrong with it. I'm going to say Hims.
Okay.
Hims, yeah.
All right.
Just because I envision, well, this is maybe typecasting the Hims customer too much, but I'm picturing insecure men observing Love Island and maybe needing to deal with some of their insecurities, which is what Hims helps with, I think.
Yes, you know
Rumor
what,
has
Steve?
it.
We're on the same wavelength. I picked Mod Sexual Wellness, the new
There you
D2C brand. I think we know this customer. So ITV, if you need any suggestions for what brands to go out and pitch, Steve and I have some ideas for you. Okay, next question. Richard Branson recently announced he'll be departing for space 9 days before recent retiree Jeff Bezos. If an epic billionaire space battle took place between the two, who would win, Steve?
Well, why don't we have Zuck in there? I kind of picture like him hoverboarding to space. I think I'm going to have to go to Bezos because they're both maniacs, but I think, Bezos has got a little bit more of a track record of executing on maniacal behavior.
He is pretty jacked these days too. I thought about him. I'm going to go Branson because I feel like he is going to do, like, Branson's sneaky. I feel like he would come in and he like knows, some ninja moves or something and could take out Bezos at like the 5-star death punch or something.
Like ninja and steroids in an epic battle.
Yes, exactly. Apparently,
right.
Andy Jassy took Bezos out with the kayak paddle at a outing a few years back too. So I'm gonna go with Branson on this one. I kind of hope it happens, Steve. We'll see. We'll place our bets right now and see what happens. Speaking of space travel, would someone have to pay you to go to space, Steve, or would you pay to go to space?
They're going to have to pay me. I'm a bit of a baby from a risk-seeking standpoint, and I'm quite claustrophobic. So it's going to take a pretty big check, I think,
I
to get me in
agree.
there.
I'm with you. I'm just a-okay from down here. You would have to pay me a lot of money to get on either one of those spaceships. Okay. One thing we don't have in space yet, but are likely to soon, is Starbucks. The coffee giant announced this week that they'll start offering secret menu items available for order via TikTok and Instagram. Steve, what is your go-to Starbucks order?
My go-to Starbucks. I mean, I'm going to come across as a really boring guy. My go-to Starbucks order is a grande americano. If I'm feeling a little bit frisky, I might go flat white with some
Ooh.
of those little egg bites. You know,
Oh,
good source of
nice. The
protein. Yeah,
sous vide
yeah.
egg bites. Okay.
Sous vide egg bites.
Well,
Yeah.
well, Steve, if somebody would like to buy you a flat white or a grande americano, where could they find you?
Oh, they can. I'm everywhere, shamelessly promoting things. So they find me on social media, which at Stephen P. Dennis, or my website, which is www.stephenpdennis.com, and that's Stephen with a V, the correct way to
The
spell it.
correct way. Let it be noted, the correct way to spell Steven. You can check out the newest edition of Steve's book, Remarkable Retail, or they'll be launching season 3 of Steve's podcast, also called Remarkable Retail. Steve, thank you so much for being with us today. We really appreciate having you.
Oh, thanks. It was fun. Thanks for having me.
That wraps us up this week. Happy birthday to Kevin Bacon and the one and only Beck, who, if you were wondering, of course you were, has a Bacon score of 2. Beck was in the movie Southlander with Greg Henry, who's in the movie Super with Kevin Bacon. And remember, if you can only read or listen to one retail blog in the business, make it OmniTalk. Our Fast Five podcast is the quickest, fastest rundown of all the week's top news, and our twice weekly newsletter tells you the top 5 things you need to know each day. And features special content exclusive to us and just for you, and all within the preview pane of your inbox. You can sign up today at omnitalk.blog. Thanks as always for listening, and please remember to like and leave us a review wherever you happen to listen to your podcasts or on YouTube. And of course, be careful out there. The OmniTalk Fast 5 is brought to you with the help and support of the A&M Consumer and Retail Group. The A&M Consumer and Retail Group is a management consulting firm that tackles the most complex challenges and advances its clients, people, and communities toward their maximum potential. CRG brings the experience, tools, and operator-like pragmatism to help retailers and consumer products companies be on the right side of disruption. And Takeoff. Takeoff is transforming grocery by empowering grocers to thrive online. The key is micro-fulfillment. Small robotic fulfillment centers that can be leveraged at a hyperlocal scale. Takeoff also offers a robust software suite so grocers can seamlessly integrate the robotic solution into their existing businesses. To learn more, visit takeoff.com.